A single 5-story building in the Cayman Islands that is the official headquarters for 18,000 corporations. A tech giant that paid a tax rate of 0.005% on its European profits. And a silent global war where the only casualty is your paycheck. By the end of this video, you will understand exactly how the global race to the bottom turned sovereign nations into desperate salesmen, and why the government is raising your taxes to fill the black hole left by the companies that own the world. You are about to see how the middle class became the designated loser in the global economy. Stop being angry at the price of gas. Be angry at the potholes in the road. Look at the crumbling bridge you drive over. Look at the underfunded school your child attends. Look at the hospital bill that bankrupts your neighbor. You think these things happen because the government is broke. The government isn't broke. The revenue stream was stolen. For decades, you have been told that if we tax corporations too much, they will leave. They will take the jobs and run. So, we lowered the taxes, again and again. Did your wages go up? No. Did the prices go down? No. The savings went entirely to stock buybacks and executive bonuses. The stakes here are mathematical. A national budget is a zero-sum game. If the richest entity in the room stops paying its tab, the waiter doesn't just tear up the bill. He hands it to the next person at the table. That person is you. You are working extra hours to subsidize the infrastructure that Amazon uses to deliver its packages. To understand how they rigged the ledger, we have to look at the 3-step hustle. It transformed the global map from a collection of countries into a menu of tax loopholes. Step 1 is the setup, the threat of flight. In the 1950 and 60, corporate tax rates in the US and UK were high, often above 50%. And the economy boomed. The middle class was built on this revenue. But in the 1980s, the narrative changed. Economists and lobbyists started whispering a new theory. Capital is mobile. They argued that money flows to where it is treated best. They pitted countries against each other like gladiators. If Germany charges 30%, Ireland will charge 12%. If Ireland charges 12%, Bermuda will charge 0%. Nations started slashing their rates in a panic, terrified of losing investment. Since 1980, the average global corporate tax rate has been cut in half. They called it competitiveness. It was actually a surrender. Step 2 is the trick, profit shifting, the IP shell game. This is the magic trick. Let's say you buy a smartphone in London for $1,000. You assume the profit is made in London. Wrong. The tech company separates the physical phone from the intellectual property, the logo, the software, the patent. They assign the ownership of that logo to a shell company in a tax haven. Then, the London branch pays a massive royalties fee to the tax haven branch for the right to use the logo. This fee is so high that it wipes out all the profit in London. On paper, the London branch made 0 money, so it pays 0 tax to the UK healthcare system. Meanwhile, the tax haven branch makes billions in royalties, but the tax rate there is 0. They didn't move the factory. They didn't move the workers. They just moved the money on a spreadsheet. Step 3 is the proof. You want the smoking gun? Look at the European Commission's ruling on Apple in 2016. They investigated the deal between the tech giant and Ireland. They found that in 2014, the company's effective tax rate on its European profits was 0.005%. That is $50 of tax for every $1 million of profit. Read that again. A nurse pays 20%. A teacher pays 25%. The most profitable company in history paid a fraction of a penny. This isn't an anomaly. It is the industry standard. According to the IMF, this base erosion and profit shifting costs governments up to $600 billion a year in lost revenue. That is $600 billion that could have paid for clean water, renewable energy, or debt relief. Instead, it sits in an offshore vault, doing nothing. So, how do they get away with it? They captured the solution. In 2021, the world leaders announced a historic deal, the OECD Global Minimum Tax. They agreed to set a global floor of 15%. They claimed this would stop the race to the bottom. But look closer. 15% is still historically low. By setting the floor at 15, they have effectively set the ceiling at 15. They have legitimized the tax cut. They gave the villains a safe harbor. Now, corporations can pay this bargain basement rate and claim they are paying their fair share because they met the international standard. The exit strategy was to rewrite the rules so that the heist is no longer a crime. It is now simply global compliance. The wealth transfer is permanent. The burden has officially shifted from capital to labor. We have created a class of organizations that have the rights of citizens but the responsibilities of ghosts. They use our roads to transport their goods. They use our police to protect their property. They use our schools to train their workers. They use our courts to enforce their contracts. But when the bill comes due, they pretend they don't live here. They are global citizens only when it is time to harvest. They are stateless when it is time to plant. The question isn't, are taxes too high? The question is, why should you pay for the civilization that they profit from?